Earth is famously a blue planet, largely covered by oceans, yet the physical availability of fresh water is vanishing. Current projections show that by the year 2030, the global water supply will fall 40% short of total worldwide demand. This chart shows a new catalyst aggressively accelerating that shortage. It visualizes the projected surge in global water demand, tied directly to artificial intelligence and digital infrastructure, forecasting a 130% increase by 2050. High-density servers generate extreme heat. To prevent meltdowns, data centers pump immense volumes of water through overhead pipes to cool the systems. The evaporative cooling process is highly inefficient. Data centers permanently lose about 80% of the water they withdraw, literally evaporating into the atmosphere. The remaining 20% of discharged wastewater cannot be easily reused. It is heavily concentrated with minerals and heavy metals, rendering it too toxic for standard municipal plants to process without overloading their systems and risking local water bodies. The exponential growth of our digital economy is colliding with the hard thermodynamic limits of Earth's freshwater supply. The servers cannot run without a physical infrastructure intervention. In response to this absolute scarcity, institutional capital is executing a massive rotation directly into physical water infrastructure. The global desalination market sits at $27.8 billion today. Projections place its value at nearly $60 billion by 2034. In an economic environment marked by sticky inflation, the forward earnings of technology companies decay because the discount rate applied to their future cash flows rises. Physical infrastructure assets offer a structural counterweight. The foundational engine driving this rotation is a financial concept known as the regulated rate base. Utility providers operate under contracts that allow them to pass inflation-adjusted operational costs directly through to the end consumer. By absorbing the shock of rising expenses, this contractual model guarantees stable yields. It transforms massive industrial desalination plants into long-term inflation hedges for investors. Global markets now price desalination as a primary high-yield asset class, shifting it from a localized municipal utility to a foundational piece of institutional portfolios. The current deployment of this capital is sharply bifurcated by geography, starting with the legacy incumbents. Driven by absolute geographic necessity, the Middle East and Africa hold over 51% of the market share. Decades of heavy investment built these sprawling coastal facilities. Historically, these legacy facilities operated entirely on energy-intensive thermal evaporation, powered directly by burning local fossil fuels. Today, the fastest expansion is occurring in new markets, specifically North America and the Asia-Pacific region. Forced by acute regional droughts in states like California and Texas, the U.S. desalination market is growing at a 7.9% compound annual growth rate, projected to hit $5.2 billion by 2032. The demand comes from two sectors. Municipalities drive 61% of the market to supply expanding megacities, while the remainder supports industrial sectors for manufacturing and power generation. Global capital is splitting into two distinct pipelines, retrofitting massive thermal infrastructure in the desert and constructing entirely new systems for tech-heavy Western cities. This chart breaks down the total life cycle costs of a desalination plant. The primary barrier to entry is the extreme capital expenditure required to get a facility built. Developers face massive upfront costs to acquire premium coastal land, install specialized intake piping, and clear years of complex environmental permitting. Once operational, the burden shifts to operating expenses. Here, the single largest and most volatile drain on profit margins is energy consumption. Electricity and power generation alone consume roughly 44% of a desalination plant's total operating budget. Forcing salt out of water requires massive, constant baseload power, regardless of whether you are boiling the water into steam or using extreme pressure to push it through microscopic filters. Plants also carry a secondary operational liability. Discharging the heavy, toxic brine left over from the process back into the ocean incurs strict regulatory penalties and high compliance costs. To achieve profitable yields, engineers must physically solve both of these unit economic bottlenecks, the crushing cost of energy and the disposal of toxic waste. The engineering solution to the energy bottleneck is the hybrid desalination system. Seawater enters the plant and is split into two distinct technological pathways. The first pathway uses multi-stage flash distillation. This is the legacy thermal method. Water is pumped into pressurized chambers and rapidly boiled, capturing the pure steam. Modern hybrid plants lower the cost of this process by co-locating with traditional power plants. They capture the wasted exhaust heat from the power facility and use it to run the thermal distillation. The second pathway relies on reverse osmosis. Instead of heat, it uses extreme electrical pressure to force the water through microscopic filters. Inside these stacked white tubes are the reverse osmosis membranes. They are highly efficient but fragile. If overworked, the membranes rapidly degrade and foul. Combining these two methods creates an operational synergy. The thermal process handles enough volume to take the strain off the delicate RO membranes, extending their lifespan while ensuring a constant freshwater output. Operators can actively protect their margins by dynamically shifting production between the thermal and membrane pathways based on real-time grid energy prices. Hybridization drastically lowers the marginal energy cost per cubic meter, transforming the profitability of the entire facility. Facilities are expanding margins further by integrating on-site renewable energy. Massive solar installations provide the independent power needed to run the high-pressure reverse osmosis pumps. Reverse osmosis requires constant electrical pressure. To solve the intermittency of solar power, plants deploy massive battery storage arrays to maintain steady current even when the sun sets. The optimization continues in the software. Facilities utilize predictive data analytics, applying machine learning to monitor thousands of flow, salinity, and pressure sensors constantly. In one case study, data analytics accurately predicted microleaks and membrane fouling before a failure occurred. That single software deployment increased the plant's overall water production by 10% in a single year. Engineers have also addressed the toxic brine bottleneck. Advanced dilution systems seamlessly diffuse the heavy discharge back into ocean currents, protecting marine biodiversity and mitigating regulatory risk. Modern desalination is a precision-engineered, data-driven system maximizing the freshwater yield on every single watt. Institutional capital is rotating heavily into water because the global digital economy physically cannot scale without it. The combination of hybrid thermal membrane systems and renewables removed the energy constraints that historically limited the industry's profitability. Alternative data signals, such as elevated Wikipedia page views and targeted institutional research on specific water technology terms, confirm this sector rotation is actively underway. While immense capital flows towards abstract digital technologies, those systems still require the physical delivery of clean water to operate. Scalable desalination has become the foundational physical layer required to sustain the expansion of the global AI revolution.